of futures trading, giving you a daily market overview. Today we're going to focus on the ES future contract. So before anything, we always want to go on the bird's eye view and understand what's the trend of the day. It's the uptrend today. We always want to go with the trend. So we're looking first on the daily interval, see what's going on in the graph, and we narrow down to 4-hour interval to mark potential entry point or cool areas, as it's called. I pre-marked it already, but we can see it very clear. Over here we have a major demand area, and on top right here we have a major supply area, and over here we have a minor demand areas. For those of you who doesn't know what's a pull area, I invite you to take our course and learn how this can affect your trade. Basically, those areas is a very high likability areas when the price can hit and reverse. As we clearly can see over here, that the price, the graph met into the pull area, reverse and go all the way up to this major supply area and then reverse again. We can see the price was being dropped from here and being met over here again. How does this affect us trade? We always want to get to a short position when we're in the supply area, and we always want to take a long position when we get into demand area. Now, to see if we have a potential entry right now, obviously right now it looks a little bit risky for us to take this position, but within the day trading, we have potential entry point. I'm going to narrow down to 15 minutes interval to see where we can go with this. So looking on the 15 minutes graph, I already pre-marked it over here, supply and the minor demand and supply areas. We can see over here as well in the 15 minutes interval, once the price met 2 times, the supply area has been reversed again to the demand area and then reversed again. Basically, buyers got into the picture. We're in this position right now, and obviously when it reaches again, it can potentially reverse. But here's what's gonna potentially is gonna happen. We never promise anything because the market will always say its last word. We know when we are in minor demand or minor supply area, which is close to a major area, the likability that the price will break the minor and go to the major are very high. It's very high. We also know the trend of the day is going up, so we're being more comfortable to take a long position than short, especially after the price met 2 times, and now is the 3rd time again. Means that the buyer is trying to overcome the sellers. So what we're going to do, we're going to look at the market profile of the day and for last night, and we can see how the price is basically trying to maintain a reasonable area right here in the middle. The market was open over here, dropped and went up again, make a small drop and up again. The areas that the market will always want to trade is going to be over here. 70% of the time, the market was going to be traded over here. We have the high value area, unfair high value, and low value area or unfair low value area. But basically those areas, the market, the price is decided it's not being traded in a fair price. Therefore, it's going to try to achieve to always get into a balance. So just because right now we see that the price goes up, I'm not going to get to a long position. I want to secure myself when I'm getting in a long position. What would be the safest one? If I'm a daily trader, I'm going to go to 5-minute interval, and I can see the market profile is being built as a D shape. D shape is a very comfortable shape to trade. It means that every time the price reach the low value area, I would like to take a long position. Every time it's going to get to the high value area, I would like to get a short position. And we're going to see over here how is it possible that it's being created. We see it very clearly that we reached the low value area and basically met at this point. This is an unfair price and reverse. We also have the minor demand to support our decision making. Therefore, we could easily take a long position over here, get some point, and call it a day if you want. Right now, we are in a position when we got to the minor supply area. So for me and for other traders, it's going to be easier to take the long position either from the low, either from the high value area, because we know it's trying to achieve to break it, as we can see right now. Or I'm gonna wait for him to make a correction right here to the POC and then long it. The right point to do is we wanna see that he checks over here the high value area to get the long position. Basically right here we can get into position. But I move my screen so you can see it easily, a couple of hundreds, and make a stop loss right here, risking 175 to take 850, which is very nice trade, very healthy one. We can also go longer with this and longer with this all the way to the highest point of the day. And still, if you are a swing trader, you can also get at the major supplier to test this theory. I hope that it was helpful for you and you enjoyed this and you got a little bit more educated. I invite you to take a part of our course, subscribe, and we're trying to cover the market on a daily basis. Thank you so much.